Hey, good morning, everyone. This is Vance Williams out of the United States. Welcome to my live Forex trading show. It's Thursday, May 15th, 2014. Uh, Back from Florida. That was an awesome trip, but I'm really happy to be back here in the Seattle area with my kids. Um, Lots of great things about both places, but thank you to my friend Steven in Florida. It was an awesome time. For those writing to me about the trading program, we're still not accepting traders just yet. But if you register, you'll be the first to know when I open it up again. And let me just show you where that is real quick. It's just on my homepage, forexartofwar.com. And then look for this picture of me down here. Lots of great stuff. First of all, I'll meet with you for free, one-on-one, and regardless of whether you're, brand new or you've been trading for 7 years. I'll help you understand what you need to learn and what you need to do to achieve your goal. So, I don't know if you can put a price on that. Then also, I'll give you my book, Seize the High Ground. That's only been available recently. Prior to this offer, it wasn't even available for sale. We only shared it with our members. So, excuse me. But it's gonna go into the logic. You're gonna really like it. Third, if you do this, you'll get on the waiting list, and of course, being on the waiting list is no obligation to sign up for the training program, but at least you'll hear about it first. Okay, so let's get back to our charts. Oh, quickly, congratulations to Natasha, who just finished her level 3 trading plan. Sorry, I'm live, so you get what you get, and I don't always hit the mute button. Got just a little bit of a cough. But congratulations to Natasha. She's written one of the best starting plans that I've ever seen. It really is good. I worked with her very closely to do this, but she did a great job. I also want to congratulate Colin. He's on about his third and fourth series. He just finished in level 3, and Colin's one of the most steady and consistent traders that I've come across. And what I really liked about this time when we reviewed his work. We made some great adjustments, so it's looking really good, Colin. Nice job. All right, so let's get to the market. First of all, high impact data. We had some data out of Germany at 2 a.m. That's come and gone. We have data that was just released out of the United States. That's core CPI and unemployment claims. Those don't tend to be market movers by themselves, but if the market was waiting for something and then they see something positive or negative, it'll start to move the market. I don't pay a lot of attention to high impact data, but for those of you who follow me, you know it has its place. 10 a.m. this morning, coming up at about an hour and 15 minutes, the Philadelphia Fed Manufacturing Index will come out. Usually the markets have a good read on that, so we're not expecting anything there. At 7 p.m. today, which is pretty late for Fed announcements. I don't know, she might be getting out of bed or something, the hours they keep. I'm just kidding. But they could release a surprise. The Fed still has the power to, move the market for a while. So I'm not going to say there's going to be some hyper volatility. Then I don't think there will be because the major markets are closed. At least the ones that we watch, and so I'm not thinking much will happen there. So I wrote an email and and posted that today I'd be going over the most repeated pattern in Forex trading with you. It's something that we use all the time. We just maybe don't explain it all the time. So we're going to do that today. So let me cover that with you. It's very, very simple. Here's the pattern that you have to remember. I'm just going to draw it on the screen. This is the pattern. Just like this. I would give this pattern a name, but I'd rather just have people focused on the behavior itself. This is the most repeated behavior in trading. I don't need to spend an hour talking about it. It's very simple. When price makes a move in a direction, right? Especially if it's a trend advancing like this one right here. See how the trend is moving down right here and it's advancing. It's just going to tend to make a pullback and push again. It's going to do that over 90% of the time. So this is the most repeated and reliable pattern. The core of good logic is always human behavior. That's how we anticipate the future. If you know what people have done in the past, you know what they're likely to do in the future. So the core of good logic is human behavior. Even algorithms that are created, most of them are based on human behavior. So that's the core of logic. And so we know that this is the most repeated and reliable pattern when price moves, especially in a trend advance. When it moves in a direction, at some point it's going to pull back and it's going to push again in that direction. So that's the most repeated pattern. And you know, if you focus on that, I think you'll have a good starting point for reaching your first goal, which is consistent profit. If you make it too technical, too complicated, you know, and you're not getting high probability setups, it's going to be very, very difficult for you to make consistent profit. So I'm going to do some analysis now. As you can see, there are no markings on my chart at all, and I'll talk about the most repeated pattern in the context of my analysis. So as you can see, we've had a huge move down. We're flirting with that that weekly level right here. Right now, it's just above it. I was talking in our live trading room yesterday. Our sentiment is long-term negative U.S. dollar, and the reason for that is because this is a weekly chart, but we had a monthly candle close above this 5-year range. Now, to change that sentiment in 2 weeks, this candle would have to close back down inside here. And if it does that, which it could, we'll be back in our 5-year range again, and this is probably going to, you know, move down in here. But if it stays above here, it's probably going to go, and our sentiment will be confirmed. So that's a little update on the long-term trend. Let's pop over to the pound. And you see the pound's making a bit of a price move up now. Let's zoom in a little bit more. Okay, so one of the things that I do when I get to the charts each morning, and I'm looking at price movement. So let's see if there was a trade right in this area. Sometimes I'll put a little vertical line so when I drop to the 5-minute, I know there's another technique with a little triangle there, but I don't know. Old habits, right? So going to the 5-minute, I'm going to zoom in. That's what 5-minute is. It's zooming in. I don't trade 5-minute candles. It's just zooming in so we can get a better look at price. And what we see here, if we draw the fib, it did not retrace 38.2 or more. So this is a very strong move that happened here. So we just keep moving the fib down and moving the fib down. And here's where it pulls back to 38.2 or a little more and then makes the second push. See that? So there's your most repeated pattern, and you just gotta camp out and wait for it. You know, you don't be a tin horn, as they call them back where I grew up, where you know, just run through the bushes chasing after the deer. You're not going to catch them that way. Okay, what you got to do is set up in a spot. That's what Seize the High Ground is about, by the way. It's about knowing where the market is most vulnerable to profit taking to you. It's the behavior that's the most repetitive. It's what you're looking for. So this is the deer you're looking for. It just goes, it never retraces 38.2, and then boom, right there, it does it. So that's where you'd be camped out. You know, some traders would put their stops, you know, up in here in the barrier, and you know, just different people would trade this differently. So you know, personality comes into play in here, but the logic is all the same. You know, so here it is, boom, boom, boom. And I haven't looked over the trader's work this morning yet, but I'm sure somebody caught that trade. I'm quite sure. All right, so that's the pound. So once it makes this move, then we would basically deem this exhausted. And what I mean by that, the behavior that you look for to predict the future, so to speak, the behavior that you look for is gone. It's already played out. It's made a move. It's pulled back to 38.2 or more, and it's pushed again. So now we would expect more profit taking or consolidation. So that's what happened. It stalls and it goes along like this, and then it makes another move right here. And so let's see what it did here. Move down here. No pullback to 38.2. It moves down here, and then it chops around. Now, this is one of the 5% of the times it doesn't make a second push, right? And there are some reasons for that. You know, maybe it's market conditions, what have you. So they stalled, maybe waiting for high impact economic data, and it was negative for the U.S. dollar, and then just went the other way. So there's some core elements that go into a good trading decision, the most repeated pattern, that's about price direction, which way is it going to go, that's only one of them. So anyway, so that's what we're looking. So right now, I mean, this wave here that we were looking at has reversed 100%. So any behavior that we were looking for to predict what might happen is over. It's gone. And so right now it's going to be decision time. And so we probably come out to the 30-minute. And then what I would do is I'd say, okay, what are we going to look for now? Let's get rid of some of this stuff on here. It's mucking up our screen. All right, that's looking cleaner. And let's zoom in one click. This is in our way too. And hopefully throughout this process of analysis, you'll learn a thing or two. Okay, so again, this is the 30-minute chart. You can see, look at this move, boom. Now you got to see this tail here, boom, and then push here. So that's already played out. Now we know it has exhaustion here on the bottom because this wave is collapsing. So what we would need is we would need for price to actually move below this level and stretch out into a range big enough to enter and exit with good risk management. So if it only moves 10 pips, that'll be too little. If it moves 20 or more, then that's something we might be interested in. As far as a trend reversal, I'm going to go ahead and pick this point right here. And I'm going to say probably, and this is just, this particular use of the fib is a little bit more subjective. I'm just using my experience here. The way that I was drawing it over and over again before, those are just set rules. Those are like scientific. But when you're looking at reversals, it's a little bit subjective and based on my experience. So I would say 6,800 is the key level to the top side where buyers can create an advantage with a new trend to the top side. 67.38 is what I'd be looking for. Now this is all high probability stuff. You can be aggressive and be a little bit lower probability, but you can practice and do things that aren't quite as reliable. Excuse me. Okay, so here something similar on the euro this morning. Let's. I don't think I need to put a vertical line on there. Let's drop down to 5-minute, and let's do that again. You see how the price starts moving down here? When it starts to take off, we're going to put a fib. We're going to follow it. See, it only pulled back 23.6 right there. Pull it down here, only 23.6. So the euro has actually been making moves with no correction. So the euro right now is in a position for a pullback into here or anywhere in this area right here. So that behavior that we look for, where it makes a price move and pulls back and pushes again, that has not played out yet. Now it would for more advanced trading, people who are trading live, level 4 people. Pay attention to the fact that the pound has reversed that last move. Now, the reason why that's important is because the pound US dollar tends to be speculators like us. They're people who are anticipating price movement. The euro dollar tends to be more of a reserve currency. Both the US dollar and the euro are reserve currencies. So the banks tend to move money around between those accounts that have almost nothing to do with speculation. It's just them moving and protecting money. So the U.S. dollar being the primary reserve currency, of course. But this is definitely for level 1, 2, and 3. This is definitely an opportunity here that could set up any moment here. I think I'll leave it at that for now. I hope that you learned something from the call this morning. Again, even though my training program is closed, you can still meet with me, get that book, Seize the High Ground, and get on my waiting list. And by the way, just because you join the waiting list doesn't obligate you to buy anything. It's just you'll know first when I open up the program again. But this is all an incredible value. I'll probably put up a place where people can talk about meeting with me. I guarantee you'll really love it. But again, you can go right here, just free consultation, click on that, get all that. You'll be glad you did, but really communicate with me. If check your spam box. I mean, the spam is going like crazy out there. So watch for an email from Vance Williams and follow up with me and fill out as much information as you can, because if you're really serious about Forex trading, you need to connect with me so I can help you out with that. And why am I doing it? I like to do it. So anyway, so that's about it. Thank you everyone for joining us today. The next show for the public will be next Tuesday, and I'll look for something really great to share with you then. But I hope you enjoyed the session today, and I hope you learned at least one thing that will help you with your Forex trading. To our members watching, I'll see you guys in about 35 minutes in our live trading room, and we'll watch as the New York Stock Exchange opens and follow the market. Thank you, everyone. Have a great day or a great night.